I'm Chris Pulver, joined by my team, Tad Devan, Tyson Clayton, and Tion Crick. Say hi, everybody.
Hey
Hi,
guys.
everybody.
All right. Hey, if you're out there, will you type in a wire? Yes, we got Sean in the house. We are streaming live. Will you let us know if you can hear our voice and not just Tyson and Tion and Tad, but also mine? Make sure we're coming through loud and clear. We should be good on everything. Okay, so we've got everyone tuning in here. Yes, yes, yes. Okay, good. Okay, good. Let's go ahead and let's just get right into it. We were just meeting ahead of this session, and we have a discussion around the dollar index. So, Tyson, is it fair we can start with the dollar index? And I want you to kind of pick up right where you left off on the points you were making, and let's talk about the dollar index right now.
Yeah, absolutely. I think this is a great place to start. And we were just talking about how, the dollar's been beat up. And it's obviously, over the course of the last year or so, it's down anywhere from 8 to 10%. And against some currency pairs, it's down even further. And so you ask yourself, what is the reason for the move? And we've got to remember that the markets are a discounting mechanism of future expectations. What do we know today? What do we know about the future? And then what are the known unknowns? And it prices that in. And so what's happened over the course of the last year is we know that all of this spending, all of this stimulus is eventually going to lead, and low interest rates eventually leads to inflation. Well, now we're starting to get fears or ticks up inflation. And in fact, some are very aggressive. You got lumber prices trading at astronomical prices because of inflation. And that's the reason why the dollar had been beat up over the course of the last year. But the key word in that is has been or had been. And the market has priced that in. And so I go back and I want you guys to think about this in relation to the stock market. The stock market went down and had a massive capitulation move down in mid March before COVID was the astronomical thing that it is right now. Before the massive death rates and all that kind of stuff spiked up, we didn't really start to see a massive spike until mid May. So why did the market put in a capitulation low in March? Because again, it was preparing for what is known today, what is known for the future, and what are the known unknowns of the future. And it was preparing for that. And the same thing has happened in the dollar. It's prepared for the inflationary move. We've now got it. We're sitting at that level. And from now, probably for the next few months, we've set a floor and we're going to rally. I don't know if we're going to get back to those high points, but I look at the chart that you're looking at right now, and
Hmm.
I see a very clear level right around that 12,250 level that I think we could easily get back to. So I think a lot of the inflationary move has been priced in. And so I believe bonds are going to continue to sell off. I believe the dollar is going to continue to rally. And I think the market for now, the stock market could continue to rally because there's a lot of money in the system. But eventually, we got to figure out what's going to happen with the inflation rates and the dollar. But I believe the dollar set at a low end. And with that in mind, I like currency pairs, buying the dollar CAD, selling the Aussie dollar, and looking for ways to buy the dollar. Don't go all in, but I love the setup right now.
Yeah, I'm. So we have been. So actually, last week was an awesome week to see this kind of violently take shape, right? I mean, look at the last couple of days. So today we have a bit of a quiet day on the U.S. dollar. We have the last two days prior to that. We have Friday's day and Thursday. Look at Thursday, Friday of dollar strength and what that equated to into the Thursday, Friday sell-off in the stock market. Right? I mean, we saw a ton of risk-off trading, and I actually showed this to traders this morning in one of my live sessions. This is actually Friday's currency strength chart. And so this is a really good lesson for traders that are looking at what does risk off trading look like, or what does this kind of safe haven trade look like. And so having the dollar on top, having the yen on top, having the Swiss on top, those are all considered those fueling, funding currency pairs, those saving currency pairs. You look at the Aussie and the New Zealand's, they were the weakest last week. And so, fast forward to today, today's trade is a little bit different. We have, U.S. markets rebounded like by 2%. We had almost a 1% gap in futures this morning. So we've had like kind of this return to the rally, and a 2 to 3% sell off respectively last week is just bringing on more, buy the dip. So it's interesting, Tyson. Like, I'm totally with you on the technical side for the currency pair because I think the dollar is also looking to rally. My particular favorites, let me go back into this screen here.
Yeah, real quick while you go back
Yeah,
there, and I'd
sure,
love to
sure.
get the team's idea on this. To see a little bit of a rally in like the Aussie dollar and some of these dollar pairs doesn't shock me at all because last week was a full bearish engulfing bar of the prior week before. So it was a massive move.
Right,
This is not a small move.
right.
And so for us to retrace back up into some of these supply levels doesn't surprise me at all. So I look at this as, man, all of this strength that we're seeing today are good opportunities to start to get in if you're not in this trade because I think that that high that was put in last week is going to hold well. So you're going to have a small amount of risk in comparison to the potential return on the downside.
Yeah,
You know, and
go
just
ahead.
wanted to add one thing to that too for the traders that are looking at this that use technical patterns. I mean, it looks like we have a bearish crown setting up as the market just recently took out support. Euro dollar 4 hour, that's a 4 hour on the Aussie,
Mhm.
also is very close to taking out the A low. So we have a crown alert on the Aussie dollar, crown alert on the Euro dollar, both bearish crowns, which could be setting up for what you're talking about, Tyson, here, looking for some more dollar strength.
Yeah. I got a target on the euro US dollar at around about 1.15 figure. Um, I do expect the dollar to rally for the next couple of months, and that would mean that the euro US dollar is going to give us a nice opportunity to the downside. So, Chris, if you put a horizontal line there at 1.15 figure, that is a psychological level as well. It's a nice pivot. It's a confluence of support.
Yeah.
And it's
Mhm.
I
also
love this
a
too.
level of fast resistance.
Yeah, of
You
course,
look,
man.
we
I was
all
gonna say
know trend
that's a
analysis
great spot.
101 is higher highs, higher lows. We take out that low, like Tad just said.
Mhm.
We're now putting in a lower low. This could be cracking down, guys. I like that.
Yep.
Mhm.
We it's like just look to see if we take, we take out this low, look to see if price breaks, retest, goes. We take out this low, look to see if price of breaks, retest, goes, and see if we can stay. And it may not be fast, right? Like this might be some type of channel that corrects down to the levels that we're all talking about, like the 117 area, 116 area, 115 area. This might be in some type of corrective wave, but if we see lower highs as we're seeing this, analysis play out, lower highs, we're still going to stay within that context of a stronger dollar. Yes,
Mhm.
I think. I mean, it looks pretty good to me. One of my favorites right now is, you know what? So last week was a pretty solid week for me. Um, Ended up taking close to 1,000 pips on some of the dollar crosses. Took a lot of partial profits. I also, let's finish up on the dollar here. I really think that the dollar CAD and the dollar Swiss are two of my favorites right now. Now I'm still in Aussie dollar, I'm still in pound dollar, I'm still in New Zealand dollar. I have a lot of like good dollar positions running, but dollar CAD to me is like one of my favorites along with dollar Swiss. And I'm not sure if dollar CAD is like in the lows yet because who wants to talk about some oil? Why on earth do we still see oil
Mhm.
that is sitting here between? I said between $63 and $65. Expect to see some heavy resistance, and we've still stayed somewhat strong and firm. Now, just
Mhm.
recently, oil is starting to break down a little bit. So, if anyone wants to take the subject on, oil levels, what are you looking for? Trend line breaks. I mean, what kind of technicals do you guys see in oil over the coming weeks? Because I'll say this, I'm kind of asking to see like, is my analysis going to be proven by you guys? And I think it will be. But
Well,
let's find out.
actually, I'd love to throw this over to Tian because this kind of fits along the lines with what Tian's looking at in the pound Aussie. And the pound is in a little bit of a weird scenario over the course of the last few years because of Brexit. But Tian is looking at a rally in the pound Aussie, which would tell me that commodities and commodity currencies are going to sell off. And so there, if that's the case, we could see a sell off in oil. So I think it could, in a backwards way, this could correlate with what Tian's looking at in the pound Aussie long.
Pound Aussie
Yeah.
long. Okay.
Mhm.
Do you want me
Yeah.
to switch over to pound Aussie, or do you want to talk oil for a second? I mean, commodity
Well,
prices,
just
like, go ahead.
I'm waiting for a very aggressive inner trend line break on oil there as well.
Okay.
I think there's an excellent buying opportunity on the dollar Canadian.
Yep.
Obviously, in over time, it's gonna continue lower, but with this correction, I think there's a good buying opportunity on the dollar Canadian. We just need to get oil to sell off and the Canadian to weaken, because then I'm going to start continuing to buy the pound Canadian dollar as well. End of January, beginning of February, I had nice buying opportunities on the pound CAD. I'm out of that, and I'm waiting to get in again. But we
Okay.
need to see the Canadian dollar weaken. Fundamentally, the Canadian dollar is weak in any case. But oil is so resilient. It just doesn't want to break that trend line. In fact, we hit a Fibonacci 1.618 in the daily chart last week, but the market continued above the B high of the new Fibonacci AB boundary. So there's a 127 exhaustion Fibonacci resistance at $70 a barrel. So I don't
Yeah.
know. We just need to wait
Yeah.
for that trend line to be broken. I'm reluctant to go short on oil just yet. You need to break that trend line there.
Well,
You know,
go ahead, Ted.
just to add to that, I like trading technical patterns a lot. And if you put oil on a weekly chart and you go to the very high on the weekly, you find the high, most recent, not most recent high, but the main high from 2008 right up there, and you just draw a smart trend line or a manual trend line, you're going to see that the market literally last week and today is right at that very long-term trend line that's 14 years old, practically.
Yeah.
So I mean, that's a pretty significant trend line. So if we do see oil pull back, this could be the place we could pull back. We're very near resistance. Like Tion said, we've already hit the D extension. On my weekly chart, we are almost at a down major A, getting ready to take that out. And we're very close to the up D extension on a weekly, which is right near that A. So right where your line is, where all that resistance is, that's where the Fibonacci is on my down AB. And the D going up is just slightly above that level of resistance. So there's a lot of convergences there with these patterns that we're seeing.
Well, I think what's going to be interesting is, Tyson, I've heard your narrative on oil. You kind of like a perma bear on oil, long term.
Yeah.
So with this down trend line, I'm curious, is this kind of giving, again, technical traders, is this looking like we have oil with a potential massive turnaround? Or what we typically like, what I've noticed the last couple of years is oil finds these really steady ranges. Now, last year is a bit of an outlier because we had such a dramatic sell-off in March when futures prices hit negative cents in oil. And we've had nothing but recovery since. I mean, if you were long oil, post March, it was an incredible recovery. But now it's like, okay, oil, I see you've had your fun. Let's look at some technicals now. I'm looking at this, $60 to $65 area. I could see oil trying to settle back in between $60 and $45. And then just, I mean, again, like, is this a level where supply and demand can exist? Is this a level where companies and countries can be profitable and maintain margins on oil production? Is oil ever going to get back to $100 a barrel, or where we
So
we're talking $100 to
I think
$144
so.
historically?
I
yeah,
think so.
so
I
I
got a
think it
target at
real
170.
I got to tell you, so I am a long-term perma bear on oil. I think we're going down to $15 a barrel when it's all said and done, essentially just based upon the demand in the next 15 years.
Yeah.
Yep.
Demand for oil is going to be literally a fraction of a fraction of a fraction of a fraction in 20, 25 years. Now, this is a long-term forecast, right? Saying all that, the things we know that are coming is transportation is going to start to pick up. People are going to start to travel again. Inflation is coming. And we are 3 to 5 to 10 years away from electric vehicles truly taking over the combustion energy. So therefore, can I see oil having to move back to 100 to even 120 within the next 2 to 3 years because of inflationary pressures? Yes, I can. So I think we could get back to between 100 and 150. Ultimately, 20 years, we're at $10 or below.
Okay,
On
so
that
Tion,
weekly
take your
chart,
take
there's
your
actually
take
a
your
falling wedge.
$100. What's that?
On that weekly chart is a falling wedge with a target at 170.
I could see it because here's the deal, guys. We don't know how big this inflationary train could be. Like you think about, look at what lumber prices have done. They have skyrocketed. They're up like 400, 500, 600%. What if we see that type of price appreciation in everything? Now it's going to feel really good. You're a homeowner and you're owning inflationary assets and all that kind of stuff. Bitcoin. It's going to feel really good for some, and it's going to feel really, really bad for a lot. And so I don't know how big, how bad could this get? And so I look at oil right now based upon what we know coming in the world, and I just can't be a super bear on it right now. Long term, I'm a super bear, but over the course of the next few years, I would actually look to buy dips.
Yeah. So let's say this. We brought this up because of the dollar CAD, right? So if we're all kind of looking here in the near term of oil, and so I typically draw a lot of scenarios here, right? Like we have this, this recent low, this slightly higher low, today's even candle slightly higher. If this continues to kind of trickle higher just a little bit, I'd be looking for this kind of rising wedge against the trend line. Now, if we break this trend line, then we're looking for that move back down into the mid 40s. That's what I've been looking for. That's part of the reason I am also long on dollar CAD. And I think if this trade starts to come together, if our oil gets on the right hand side of the trend line, if we, break the trend line, retest for a lower high, fall back down to the mid 40s, if we get on the right hand side of the trend line, test the highs, if we break over here, work our way back up to the highs or even slightly higher, I'm still looking down to those mid 40s. So to position that, what I like about oil is if that technical comes to fruition, then dollar CAD should be able to mirror that. And so if oil's looking to drop, then we should see dollar CAD have the ability to get up into this area here. Now, I'm going to be somewhat conservative on my forecast. I think that dollar CAD can easily get back to this level right around 1.30. That should be an easy profit target for anybody that's long dollar CAD to look to hold. And ideally, I'd like to see dollar CAD get up into this area here of past support, becomes future resistance right around 1.3350. So, I don't think that we're necessarily guaranteed to have the bottom yet, even though, like Tyson said on the dollar index, it looks really promising. But I'm still prepared for the market to maybe come down, one more time and test the low, make sure that everyone's really serious about it, and then we'll see it, get that nudge to the upside. But I do like long at least until 1.30. And if it surprises us more to the upside, like we've seen, recently, we saw some blowout moves here the last 2-3 weeks on yen pairs. Like yen pairs definitely moved a little bit higher, a little bit more like irrationally than they normally do. Like we saw a lot of choppiness and it was still in a trend, but all of a sudden the yens took off like that first part of I think it was that like first or second week of February where it's like it was whatever President's Day weekend was. Like we had a holiday trading on Monday in the U.S., but the markets were just like pushing things higher, and Tuesday opened with big gaps, and the JPY is extremely weak. So long story short, I think dollar CAD is a great way to exploit what we're talking about here on oil. Any other dollar pairs? Let's switch over to like pound Aussie. Tian, I know you like pound Aussie long, and Tyson, you did as well. So what are your thoughts on pound Aussie long?
Yeah, so the pound Aussie is already set up for a buy. I'm gonna continue buying until we hit the daily D extension at 83.01.
Okay.
So if you want to draw up fibs on the daily chart, and then it's more than likely going to continue higher than that to round about. Let me just see here. Actually, let's just continue to that daily D extension. I think if it moves higher, we'll look at the next level of past support becoming future resistance.
Okay.
But I haven't enabled my trading systems in a bullish capacity just yet. And the reason for that is, if you look at the Aussie index, I don't know if you have the Aussie index on your smart trader, AUDX. If you have that, there's an uptrend line that needs to be broken to the downside. You can even look at the Aussie US dollar. There's an inner trend line on the weekly that needs to be broken to the downside. And once that one is broken, then I can start selling it.
Okay, so
you're not going to start buying the pound Aussie, excuse me.
Yeah, so you're saying if you get that confirmation on Aussie dollar to the downside, then you like that pound Aussie to be deploying bullish to the upside.
Yes.
Okay.
In
And
my opinion, the Australian dollar as a basket is exceptionally overbought, but it's not confirmed bearish just yet. From a timing perspective, I don't know if we are there yet.
Sure.
So
I love this trade, Tian. I'm going to throw a curveball at you because that's what I do. But I want to look. So if I agree with you, I think we're all kind of on the same page with the Aussie being overextended and looking for that nice. I think late last week was a sign of what's to come. If I look at the Aussie Yen, so I like this trade a lot, and I love the fact that you're looking to sell the Aussie, just like I am in the Aussie dollar. But I'm kind of trying to figure out, okay, what is the best places to allocate resources? And so I look, pound Aussie looks really nice on the upside. But then I say, but the pound dollar or pound yen is kind of looks like it could be a little weak. So then that brings me to the Aussie yen. So what are your thoughts on looking at the Aussie? If we're looking at for weakness in the Aussie, maybe having a focus on something like the Aussie yen. What do you think of that, Tian and Ted?
Absolutely bearish. Awesome. I think that's a wonderful selling opportunity on the Aussie yen.
Tyson, is that
so
music? Is that music to your ears?
It looks like the Aussie's going to be weak. It's just, kind of pick your poison a little bit.
Yeah.
I like the Aussie yen and Aussie dollar, but I don't think you're going to go wrong with pound Aussie either.
Yeah.
Yeah, I
And
agree.
looking at the structure, I mean, Tierney had a target on pound Aussie. It's like he's not looking at anything ridiculous. I mean, we have range levels back around
Yep.
1.84. In fact, that's what I was kind of expecting on pound Aussie. Is I didn't know if we were going to have more downside after this kind of slowly put in lows. I actually thought we would pull back deeper and then head down. And so the fact that we've just gone sideways here, I feel like TN's trade is lined up perfectly for this to come back and just test these previous highs. So I mean, he's got a D extension there right around 8,300. Range levels around 8,400. So I definitely like long. Euro Aussie was long last week for me. Pound Aussie looking to get long as well. Pound New Zealand I'm long. Euro New Zealand I'm long. So a lot of these are just recovery trades. Like the Aussie New Zealand have both been a little bit overextended, a little bit too extreme, and just looking for some decent tops and bottoms to form and have the market balance a little bit. Now in Forex, that's likely going to happen a lot easier than in stocks. You tend to see a lot more balancing in currencies, especially when things line up technically with just a simple like relative strength or momentum and divergence. Like all these things line up really nicely. But even still, like I'll say, even the last couple of weeks, the market stretched a little bit higher. The market probably made some traders nervous. Tyson, I want to ask your whereabouts on the Aussie dollar. How you doing on that trade? How you doing overall?
It's finally starting to crack a little bit on the downside.
Yeah, yeah, yeah.
I've got a target of 75. I've been on that target now what seems to be like a lifetime.
Mm-hmm.
Um, and I think we're going to get there. I actually thought we were going to get to 75 before we took out these most recent highs. I started to get in a little bit early. There's tools that I should have been using to confirm the trade. Um, but I am pretty darn confident because we're trading at such an extreme level. We have a bunch of supply sitting above. We're kind of eating through that supply because of the massive, complete bearish engulfing um, week last week that we had. We took out those highs aggressively, priced in, sellers come in and just beat the living snot out of this thing all the way down, close it below the prior week's lows.
Mm-hmm.
Super bearish bar. I think that that's a very clear sign that we put in a short-term top and we see 75 before we take out those recent highs.
Nice. Yeah, look
Hmm.
at that right there. I mean, that is just an awesome
Yep.
dark cloud on the weekly. So I mean, a long wick to the north. Two awesome days of selling. So
Yep.
that's a big deal. So what will typically just a little lesson in price action for traders out there, when we see this type of bearish candlestick, this is a dark cloud cover on the weekly. What's probably going to happen is we'll have the candlestick respected, and we will see that price will try to retest it. So we might
Exactly.
retest somewhere inside of the candle. We might retrace a little bit.
Hmm.
That's why if you go down to those smaller time frames, like we looked at
Well, that can
originally.
create a head and shoulders too, because you got the left shoulder. If we kind of retrace up there, base around that kind of that tip of the shoulder on the right side, and then fall, that would be a nice head and shoulders also, or that crown like Tad was
Yep.
pointing.
Yep.
Yep.
So we could have anywhere in here like these pullback levels. You can drag Fibonacci's from high to low, look for those retracement levels. I'm looking for reload trades in here to go down and make a new low. That's really all I'm looking for.
Yeah, I like what that a down fib on that current swing puts the 382 at 71.12. You look over there to the left at resistance, that's also right in the neighborhood of that too. So it's lining up with an area where we might see the market pull back to, and then I think we're going to see this thing drop.
Yeah. And
So
and
it
that
sounds like we're all kind of on the same page
Mhm.
as we're looking for weakness in the Aussie. So this strength that we're seeing early today, would we all agree that look at this strength? Don't get too excited. Don't jump in too quick, but look at this strength early on this week as opportunities to potentially start selling the Aussie.
that's what I'm looking at. Yep.
Yeah. Yep.
Yep.
Yep. Awesome.
So what do you think would be the catalyst for another leg down? Friday's unemployment figures?
That's a great question, actually.
Yeah.
You know what? Honestly, before we start throwing out news events, like, because I mean, I trade non-farm with traders every month, and I can't remember the last time that non-farm was like a big deal as far as
Yeah.
like oh look at all this crazy volatility. It's like it's a lot of noise. It's a lot of noise. It's been pretty uneventful the last probably 6 to 12 months. One thing I would actually mention would be this TNX. It's the 10-year Treasury note. Okay,
I was
and
just going to say that
yep.
because it's kind of it's kind of weird right now. But I was thinking the stimulus passing could actually be very bullish the dollar because again, the bond rates could spike up on that because of inflationary pressures, putting a bit under the dollar.
Yep. So we had, I mean, this essentially from the kind of the double bottom here back in August of last year. This thing has had a threefold return. So we had the 10-year note down to 0.5, and last week we peaked at 1.6. So I mean, that's an incredible turnaround. And usually what we see is the 10-year note will lead the dollar. And so it was surprising to see that the 10-year was making this recovery from its double bottom last year, and the dollar was still getting hit, still getting hit, still getting hit. But as we mentioned, like, buy the rumor, sell the facts. So things were getting priced in on the dollar, right? Weakness of a crazy dovish central bank, weakness with incoming anticipated stimulus, and now that it's here, I mean, and we're looking at, I mean, everything I'm seeing from talking heads and analysts are looking at a strong recovery for the U.S. economy. Whether you think that's real or not, I mean, unemployment levels are still elevated, jobless claims are still elevated, but average earnings has gone up. There's more discretionary cash for traders and investors now, which is probably a good thing. I think there's a concern that there's still this potential K recovery of like those that do well do very well, those that don't do very poorly, and it's an uneven recovery. But as far as getting through COVID, looking at the economy returning to normal, this is probably all good things for the U.S. economy and probably the global economy at some point. With vaccines rolling out, Johnson & Johnson being approved, we have, again, global vaccinations for anyone that wants them. I mean, my wife works for the College of Pharmacy here in Michigan, and they're saying that for general public, I mean that's I don't know if you guys fall in the same category, right? I do. General public, probably like fall. Like everyone that wants the vaccine can probably have access to it probably by fall, like September to December, and that's going to be the 16-year-old to 64-year-old. Like that's a lot of people,
Yeah.
but if it's readily available with logistically, if there's not any supply chain issues, then if everyone wants to be vaccinated, then hopefully by that time it's like you can go to your local pharmacy, CVS, Walgreens, Costco, wherever it is, and if you want it, you can get it. So I think
Another
we're
really
looking forward to a lot of
interesting
things. Yeah, go ahead.
Yeah, another really interesting trend that I just noticed is so the last three jobs reports have come in under expectations. And here's the very, very interesting point on that is it's only happened like 3 or 4 times since 2012, where the expectations, the forecasts have actually been missed by quite a big percentage 3 times in a row. And the fourth time, it's only happened where it's missed it 4 times, 2 times since 2010. So the probability says that the expectations of 185 are going to be surpassed this expectations based
Mm,
on the jobs number, just based on the patterns that we typically don't miss even 2 times, let alone 4 times. So
right.
I think that the number is going to come. I think because you think about why would that happen? Well, because it's human beings that put out these forecasts, right? It's psychological. But if they keep missing to the downside, they're going to be more pessimistic going into the next one. So even though somebody might think it's going to be 220, but they're like, man, I keep missing, so they're going to lower their expectations. So I think it's going to come in over 185. It's going to get a bid in the dollar. And so I think Tian, you're right. I think the jobs number is actually going to be a catalyst for the dollar because I don't see us missing a fourth month in a row.
Yeah.
Yeah, and another thing just to add too is February is the first full month under the Biden administration, so those jobs will be coming solely under his administration, not splitting it from January's report. So
Right.
I'm excited to see what that actually comes out to be on Friday.
Yep, and there's also some Fed talk there. Powell is I noticed him Thursday at noon. That's something with an online event for Wall Street Journal. Powell's been making his rounds. He had a 2-day testimony not too long ago. Between Secretary Treasury Janet Yellen, now Powell. That's a pretty big like 1-2 punch combo for the Doves. But the reality is, last time that we had Fed Chair Yellen, she was also the one responsible for the Fed tapering, for the Fed like cutting back mortgage-backed securities and starting to look at anticipating the raise in rates. So at some point, look, the Fed is trying to squash the ideas of inflation. They're trying to keep every investors' nerves calm. But the reality is, we can't stay like this forever. Eventually, rates are going to have to change. And again, I don't think the world is ready for it. I think that's going to be the biggest shock to the system when all of a sudden rates have to go up. When they have to raise, like, I don't think the market wants to see that at all, but that is going to be a harsh reality because, I mean, there's very limited tools from what we saw back in March of last year to what global central banks are doing. There's limited tools what they can continue to further do to stimulate, right? I mean, we can print more, we can cut rates again. It's like, unless you're going to print more and go to negative territory in interest rates, I mean, and now you're just setting it up for you'll never come back. You'll never come back from
So I'll tell you, I think the
Yeah.
world is ready for it if everybody took their stimulus check and bought Bitcoin. But that didn't happen.
That's true.
Because then we could also stay in the inflation that's coming, right? Because that's
Mhm.
great. But no, people took their stimulus check and bought their new Nikes. or their
That's
next
true.
video game or
Hey,
whatever they bought. I don't know what they bought, but
it boosted
GameStop.
retail sales a lot last month.
it
Yeah,
did.
they were
Seeing
And
that
you
super
know what?
high.
It's
They were
going to
super
do it
high.
again.
Yep.
So
Yep.
we have another, hundreds of billions of dollars coming in,
Yep.
$1.9 trillion coming into the market. And a
Yep.
lot of that money, a family of four, I think, if I've got my numbers right, with kids under 17, I think. And if your household makes under 150,000, I think that they're going to walk with like $5,200 or $5,400 or something like that. That's a pretty good chunk of
Mhm.
money
Yeah.
that people are going to have. And you know what? The U.S. Consumer savings rate is actually right now, it's actually pretty darn high. So
Yeah.
this is coming at a time when the U.S. consumer, U.S. Pocketbooks are actually not doing all that bad either.
Right.
This is going to be massive inflationary. It's going to be feel good for a little while, but I agree
Mhm.
with you, Chris. It's going to hurt. I think it's going to not be great. Fast forward a year, year and a half from now, it's not going to be great, but for the next 3 to 4 months, it's going to feel really good.
Sure.
Mhm.
All right. Hey, let's do this. Let's pivot over into some stocks. Let's pivot over into some cryptos. Let's go another like maybe 10 minutes or so, fellas.
Sure.
Any thoughts on stocks? Like I was bringing up the SPY earlier. We saw some pretty massive gaps today. I'm actually going to take a look at Market Watch here and just look at the dashboard. So right now we have a big rally again off of some major gaps from Friday's close to today's open. We had some big gaps. I mean, look at this. Essentially, the Dow gapped higher and stayed flat the entire day. The S&P gapped higher, stayed flat the entire day. NASDAQ gapped higher, started to inch up a little bit with a bit of recovery in tech. So we're looking at 2% plus across the board. NASDAQ at 2.5%. All these were created by the open. Tyson, give me an answer out there for the traders watching. What is the best way to take advantage of like post market movement? Pre-market, post-market movement. Like, is it better to? Yeah, I mean, in fact, I saw something interesting. Like, a lot more returns are actually given post-market than actually during live trading days.
Yeah, it is. I mean, you get big gaps up, and the traders always think that they're going to be able to fill those gaps, and eventually we fill a lot of the gaps. But oftentimes we don't, and if you miss out on those post market moves, you're missing a big chunk of market. Not only that, but you guys have probably all heard the stat that if you weren't invested, I think it was like the top 15 days in the last like 10 years or something like that. I'll figure out the stat, but it's like you're basically break even if you miss like the best like 15 days, which is
Yeah.
crazy, which means you should probably just buy and hold, be long term. I'm not a fan of that. I think we can do better than buy and hold. We've got to pick our spots. I think the best way to do it is to build a thesis. Are you bullish or are you bearish? Right now, I'm bullish. I'm bullish because of everything we talked about, because we have inflationary pressures. We're going to have stimulus in the markets. We've got, think about this. I just heard this on TV. This is so true. For the last month and a half, 2 months, nobody thought the stimulus is going to be 1.9 trillion. They're thinking, okay, this is going to be cut in half. Well, guess what? It's going to be 1.9 trillion. I don't think the market's priced that in.
Hmm.
Not only that, but they maybe haven't priced in the next spending bill, which is going to be very focused on infrastructure. So again, all this stuff is going to be very, very inflationary, very good for the markets. Long term, I'm concerned, but man, this is going to feel good. And I think the way that you look at this is it's hard to be a bear right now, but it's also hard to buy at those levels in the
Mm-hmm.
SPY right now,
Mhm.
sitting at that supply level. It's really hard. So I would rather pick individual stocks that I think have gotten beat up. Stocks like GIK sitting at an unbelievable value. I am very, very, very aggressively long in this stock. I'm also very aggressively long in one of its competitors, XL Fleet. So I like picking my spots. I'm a bull. I like taking positions where I don't have to be right today or next week or even next month. If I have to trade this, so these two stocks, GIX or GIK and XL, I'd love to be able to get in and be able to get out in the next month or two or three, and then reallocate to something else. But if I have to hold this for 2 years, 3 years, I don't care, because this is a long-term investment that I'm willing to hold. So I'm going to pick my shots on stocks that I like long-term. If I get a bunch of returns short-term, I'll take them off and find something else. But that's the best advice I can give somebody in the stock market.
Yeah. And with the tech heavy move, I mean Tesla, for example, I mean Tesla, everyone's watching Tesla, everyone's watching Amazon, Apple, Facebook, your Fang Man stocks, right? Look, Tesla's at $3.20. Who's buying it?
Mhm.
Let's buy
That would be
it. Let's see here.
Chris got a time machine.
Yeah, holy shnikes. I think Elon Musk just hacked me. 709. So we've got the lows around 620. Look, I'm holding some Tesla from way back when. I did actually add more right at $800 for the thought of this. Maybe I was a little bit influenced by Kathy Wood and ARK Investments, and they're talking about this $3, $4, $5,000 price target. I'm like, I'll add some more here. And so here are my levels. I talk about this a lot in my trading room. I threw in more $800. I did take some of the breakout from $500 to $800 from last year. I've got a position in here. I would love to see if we can come back into somehow $500. And again, maybe it's just a little correction in here. There's going to be a little bit more volatility on Tesla than probably other, mainstream blue chip stocks. But I think what Tesla is supposed to be, what they're trying to price Tesla in to become. I know there's a lot more competition in the EV sector now, and major automakers that Tesla has dwarfed in terms of market cap are still going to be providing competition, but I still don't think they can really hold the kind of pioneer effect that Tesla has over the others. So I'm still long on Tesla. I'm still going to build long, and this is one, to go off of Tyson's thoughts, is like longer term. If I'm willing to say, okay, the next 2, 3, 5 years, what levels do I want to get in at? And so like right now at 12-year highs or all-time highs or 52-week highs, I don't like buying stocks at those levels. And so if you see stocks that have done this, if you see a stock price that has just recently broken a 52-week high and it pulls back off of that, you can look at really simple trend line breaks, look for confirmation, and see if we can recapture those highs. And this is a way in the short term that traders can still participate and still be bullish and still take profit and not feel like they're putting everything out there, buying at these all-time highs, and like, what if there's a correction and you see everything go against you? So what you can do instead is you can take these levels, you can have some exit strategies, you can score some points here, grab your gains, maybe take partial profits, because I know a lot of stock traders, stock investors rather, don't necessarily close positions, right? Or they'll keep something in for the longer term. So just look at levels that you want to buy from. If price comes back to them, that's an investment point. If you're looking at levels to participate in right now for new highs and new breakouts, watch those pullbacks from 52-week highs. It doesn't take much. You might have a 3, 5, 10% pullback from 52-week highs, but if we see the overall sentiment in the stock market remain bullish, we're going to see those 52-week highs tested again and again and again.
Yeah, and you know what? Real fast on Tesla, perfect example of a stock this is a sock away stock, and those are stocks that I think you can buy and continue to buy. Go, hey, what if it goes down to 300? Buy more.
Yeah.
Give an example. I think Goldman Sachs has a projection. I think it was 8.5 million EVs sold in by 2025. I'll go down a little further. I think by 2030 we could see a 15 million U.S. Annual EV auto sales. And I think Tesla could capture just on their auto side. This isn't the fact that Elon Musk wants to get us to Mars by 2024. Mm-hmm. This has nothing to do with that. And if somebody's going to do it, it's going to be Elon Musk, I think. So this doesn't even include any of the crazy stuff that he's working on.
Right.
Just the car side, I believe they can capture 30% of that market share by 2030, which means their sales are probably going to be 350 to $400 billion. We're talking probably a $4 trillion company, or a price tag of right around $3,500 to $4,000. So you're talking about a 5 to 6 times current valuation just in the car market. But we're talking about somebody who's not going to stop at cars.
Right.
He's going to be in all sorts of energy. He's going to be a battery play. They're going to be a Mars play. This could be a $10,000 stock in the next 10 years.
Yeah.
I just wanted to add to that before, real quick on that too. It's funny that you're mentioning that. Is CNBC this morning, at CNBC Europe, they were actually talking about the electric vehicle market is expected to grow into a $5 trillion market in the next decade. Right now, it's valued at $250 billion. So just think about that. Oof. Chris earlier said, "Man, I wish I had a time machine to get in at Tesla at $3 and change," which is what he was showing there. But there is so many more companies that are going to be growing over the next 10, 20 years. GM is set to get rid of all petroleum-based vehicles by 2040. Mm-hmm. Other companies are going to be following suit. So, I mean, petroleum is not really the future in terms of powering vehicles. I think the EV market is there, and there's going to be a lot of companies that are popping up over the next few years that you can get in at a lower value and ride that to the moon, pun intended. With
100%. Yeah. Actually, my favorite EV play, I would rather be in, I think Tesla has let's call it a $3,600 stock value in 2030, just based upon where I see the EV markets going. Mm-hmm. I think the company that has bigger upside than that is Fisker. And I got to pat myself in the back. I've been a long-term Fisker fan. This is what patience looks like. we started buying it. We started talking about it at about $12, popped to over 22,
Yep.
then settled back into about 15. And last week went on a really nice ride. Is sitting there too, but it's still extremely, extremely cheap. You're talking about, think about this, Tesla. Now it's nowhere near Tesla right now, but I think it could be about half of what Tesla is long term. And Tesla is a $600 billion company. This is a $6 billion company.
Wow.
Mhm.
So
Yeah.
Wow.
that's 1/100th of the price.
Yeah.
Yeah. Wow.
Yeah.
It's the last month I've definitely pretty much built an entire, EV portfolio that is like in further development. So, we're throwing a lot of numbers around here, fellas. We're throwing around, by 2030, by 2035, by 2040, all these, I mean, I saw something like, and we're talking, Tad was mentioning just GM and other automakers. Like, we're talking like just consumers. What about like fleet vehicles? What about semi trucks?
Yeah.
What about airplanes? What about delivery vehicles? Like, those are things that we're not even considering as a consumer, but those are what's happening. Like,
Right.
switching into fleet vehicles, delivery vehicles. I mean, last week, like Workhorse was a big one that made a lot of headlines because it was a 50% decline because it lost the bid with the U.S. Postal Service. But I mean, if you can get like something like a government contract or national contract, or this becomes like who's gonna do the FedEx trucks or the UPS trucks or
Pick the
Amazon's
stocks that
delivery
already have
vehicles.
the government contracts, like Lightning
Yeah,
E-Motors, who's working with the state of California already, or Line Electric, who's already working with the government of Canada. Those are the ones that you pick. Or you pick an XL Fleet, who just got a big contract with the New York Islanders to be able to be their transit source. And so those are the ones you pick. But yeah, absolutely. That I like that sector. It's a little less it doesn't have as many frills. It's not as exciting as the EV consumer, because the consumer side is what you and I know, right?
right.
We drive them, look at them. But I'll tell you, I love where Line Electric and Lightning E-Motors and all them, where they're standing. They're not as sexy, but I'll tell you, the upside is a massive, and they're safer because they're going to be dealing in government contracts, so they're going to have these guaranteed contracts, which is
Hmm.
pretty amazing
Right.
to me.
Yeah.
Yeah, that's good. Tyson, I know in some of sessions like this, like I've shared this in my trading room. I don't know if you brought that into your trading room yet. That might be something you and I end up talking more about. But just really having like this kind of EV portfolio. I know you and I've talked about it a lot, like kind of off air, like personally. But I'm really interested to see like where a EV portfolio can go over the next 3 to 5 years. Because the reality is, look,
Hmm.
it might be in the infancy right now. We might see like these pop-ups and everything like gets really really popular and starts to jump up in price. We also might see that it gets speculatively higher and then has to like settle down a little bit, right? Like the reality is, I don't think like the retail trader is just going to get it that easy, right? You see some movement right now in the stock market. It's going to settle in for the next couple of years. Maybe it gets boring when nobody's watching, and then the trader that talks about it now and is prepared for it can sit in this for the next 3, 5, 10 years and see this be like a 20, 30 fold
Yeah,
investment.
I agree. I think it's going to be much like the internet plays in the dot-com bubble, where a lot of these stocks, Microsofts, Yahoo's, Amazons, they got way ahead of themselves
Yep.
in 99, 2000, 2001. But you look back and you say, holy smokes, those were steal of deals. Those were amazing prices. They weren't amazing at the time, but long term they were amazing. And I think that's what's happening in the EV play right now. I don't think we're extremely overdone yet.
Hmm.
I do see us getting extremely overdone. That'll become overinflated within the next few months. I think it's going to happen. They'll then pair back, and it'll pair back for amazing buy opportunities over the next 5 to 10 years. And I think there are opportunities in the EV space specifically that you could look for 10, 20, 30x type of moves.
That's awesome.
Hmm.
All right, fellas. Let's go the next few minutes. Let's open it up to cryptos to wrap things up. Thoughts this week on Bitcoin, kind of leading the way. What other coins maybe follow? You guys think Bitcoin's going to make a new high before it makes a new low? What do you think?
Let's start with Tian, because I know
Yeah,
Tian,
yeah.
you've been looking for a little bit of a sell off. I'm kind of with you on that. But what are some of your thoughts on the
Yeah,
tech?
I think it's still overbought. Even though that there is a target, I've got a target at 62,800. But I think we are more than likely going to see a sharp pullback before the market goes up again. I don't know what will be the catalyst. I know that Janet Yellen, she's been talking Bitcoin down lately, saying that it's ridiculously expensive to do a transaction of Bitcoin, and it's completely inefficient, and it uses too much energy and all that. And maybe the negative talk is going to increase, and it's going to cause Bitcoin to retrace a bit. But ultimately, it is going to go up. And I'm just trying to figure out where on earth can I time my buy trade?
Right.
Is it going to be 20,000? Is it going to be 25? Is it going to be 18? I don't know. I know there's a confluence at 20,000, but I don't know. I don't know. So I'm just watching it.
Yep. Yep. I agree 100%. I like what you just said, because I agree. I'm ready to load back real heavy on a pullback. But you got to be involved. I'll give you an example of why you got to be involved. We've got people plugging their nose and getting involved now. It's literally the definition of too big to fail now. Kevin O'Leary, Mr. Wonderful, hates Bitcoin. He just started buying Bitcoin this week or within the last week, and he's now at 3% of his overall holdings. And he said he's going to go higher. Why? Because Canada has now approved an ETF. And he said, the thing I was waiting for is some validity with these governing authorities. We're starting to get it because they know it's not going away. Think about this also. I did a cryptocurrency session today, and I said, we've got three massive companies, or one massive company, a good sized company, and another smaller company that have started to buy Bitcoin: MicroStrategies, Square, and Tesla. And it's a good test case because they've bought about 60,000 together. They bought about 60,000 Bitcoin themselves. So I asked the students, I said, in the next 15 years, we've got three today. If you think out 15 years from now, could you see 250 mid-sized, big companies, small companies having some allocation in Bitcoin? And the answer is absolutely yes. I mean, 15 years from now, we got three today, and 50, yeah, that could happen. Well, you think about that, that could potentially take out 5 or 6 million Bitcoin from the overall supply. That's not even including the ones that are lost. We're talking. So the upside on this, guys, is astronomical. So the one thing that I would say, Tian, is I agree with you. We're going to get a pullback, but man, it's almost like I don't want to be the one that looks back in 5 years and says, man, I was tripping over pennies when I should have been focusing on the Benjamins we were going after. You know what I'm saying?
Yep.
Yeah.
Yeah, one thing too, if you just look at technical patterns, I mean, if you just drew recent counter trend lines on this Bitcoin uptrend, I mean, we are literally breaking through a counter trend line if you drew it on that current high with that bullish engulfing candlestick here today. But if you look at the previous high, it did recently break it. I'm on a daily chart, by the way. Sorry.
Yeah, I'm just trying to get the trend line
high,
there. Is that the trend line talk about there, Ted?
yeah, right
Okay.
there. So
Yep.
we have a big counter trend line break right there. And on the daily, you're seeing right there. And look at the previous one. I mean, you had the previous high, big pullback, bullish movement, and then before that, there wasn't much retracement going on.
Right.
Yep.
I think that so I think we're all talking like we all see, upside potential here. I was just curious, because maybe it's because I want to see this. I want to see if we have this high, we have this low, we have a lower high. If there's any type of correction this way that we can get a channel on, I think any lower low I'm interested in buying. Now granted, my break even is still in the fours, $4,000, $4,500. I'm sitting on just profit. And so for me to get back in, I realize that whatever I allocate or reallocate to Bitcoin is dramatically it's going to change my cost. It's going to change my cost basis. So that's why I'm trying to be very patient, because ideally I'd like this to be, at this level around 29,000. I'd love it to be at 20K where we have current mining costs. But I mean, I also, and I've mentioned this before, like we might see 100,000 before we see mining costs. And by the time we hit 100,000, our mining costs might be 25 to 30. And just like we did back in 2018 to 19, it was an 85% decline. When Bitcoin went from 3,000 to 20,000 and dropped in 2018, that was an 85% decline. So we could literally do that. We could go to $100,000 and drop all the way back down to 20 grand, right?
So
Like
Chris,
it's not out of the realm.
I'm a huge fan of buying at mining cost. And in my session today, there's a coin that I want to let you guys know that's trading at mining cost right now. That is an absolute screaming buy, relatively speaking. Now, Bitcoin goes down, it's going to sink everything, but you should be able to relatively outperform pretty dramatically Bitcoin. That's Litecoin. Litecoin is currently trading at its mining cost as of this moment right now. There are massive miners out there that still mine Litecoin. It's a solid coin that's not going away. I love the buy in Litecoin. It's also historically, it's under 1% of the overall market capitalization of the cryptocurrency world. And it only stays below 1% for so long. And every single time it has, it pops back up to at least 2.5%, which means if everything sells off, Litecoin could continue to rally or outperform dramatically. So I am well overrated. I'm actually have one of the biggest positions that I've had in for a long time in Litecoin. It's my favorite cryptocurrency at this moment.
Nice. All
Nice.
right. Well, Tyson, just keep the cryptos coming, dude, because I've got 8 now because of you. Between the majors and some of the add-ons, I've got 8 now running for a nice little portfolio. So, all right, fellas, any final thoughts for today's session? I thought it was an awesome session. We covered a lot of stuff. Any final thoughts, Tad, Tian, Tyson?
Yeah, who out there put thumbs down? What's up with that? And then I'm joking. Go ahead, put whatever you want to put. Anyway, make sure you like us, please. And for the life of me, man, tell your friends and family about these sessions. I think we give the best value in the entire financial world. We do it for free. We need more people watching this, Chris.
I agree.
Yeah.
I agree. And so whatever, I mean, if we typically we get like what? We post this on a Monday, we get 5 or 6 interviews for the week. It's like, come on, man. I mean, look, if we have traders out there that know that, I'll say this, everybody knows somebody that's talking about the stock market. Everybody knows somebody that's talking about trading and investing. If traders out there or aspiring traders out there have no clue what they're doing, you know that it's going to be a lot more helpful to learn from experts, to learn from people that have been doing this for real for a long time. And that's what we're doing this for. So, we would appreciate all the likes, all the thumbs up. That's great. YouTube loves that. YouTube algorithm loves it. So it helps us, get our search words up to be watched by more people. But you can have a huge impact on just taking this link and sharing it. Taking this video and sharing it, telling friends and again, aspiring traders, investors, like, get in the markets. It's a good idea to get in the markets, but do it with education. And like Tyson said, look, this is free. This is free and super valuable. And we want to take everybody under our wings. And there's a lot of amazing things that we are doing. There's a lot of amazing opportunities out there in every financial market. There is literally no better time to be a trader and investor. And to do that with, the right education, do that with the right expectations, I think you can really set yourself up for long-term success, as opposed to, hey, I've got this app, I can buy something, swipe up, and then all of a sudden it's good or bad. Like, I mean, that scares me to think that that's what trading has become for a lot of newbies out there, is just, it's convenient to play on my phone. It's like, that type of investing to me is what sports books are like. I don't know about you guys. How many friends of yours are now in like the DraftKings sportsbook, the FanDuel sportsbook, and they've $5 and $10 bets on this? It's
Hey,
like,
it's fun. It's entertainment.
I
But that's all.
know, but that's all.
Entertainment.
It's entertainment. It's gambling. I've had a couple friends strike big on a parlay. They got a couple $100 on like $15, $20 bets. They win a few $100. They're like, I'm playing with house money. They're right back where they started. And it's like, if you're again, if you're not careful like that, it becomes bad news. If you're doing that with trading, I mean, if you have all these like luck profits, and you have no idea what you did to really generate those, like, this is about teaching you the process, right? This is about giving you the ability to fish and keep making those profits. So anyway, that's our PSA for today. Thanks for joining us today, traders. Tad, Tian, Tyson, thanks for being with me. Happy Monday, everybody. Have a great week.